And I believe we are live. All right, are we live? Might be live. Here's the camera. Just checking. All right, we're live. All right. Packed room, awesome. Hey guys, thank you for coming out to this afternoon session. We are now on day 3. Tomorrow is going to be the last full day. Hope everyone's having fun here at the Financial Summit. All right. Usually we don't live stream, we don't record these presentations. We may start recording them in the future, but I thought these were going to be awesome panels. We're going to do VC, then we're going to do mining, and then we'll see where we go from there. We're in this room for, well, more than 3 hours, but we're already running 15 minutes behind. So without any further ado, I'm going to move the camera over to introduce Mike Jermuz. And Mike and I have a very long history. That could be a whole presentation on that. But Muzz and I go way back. It all started when he messaged me saying he had a power supply for my miner that I was setting up in the woods. That's kind of how we met the first time. And Muzz has been organizing the Unconfiscatable conference, and we've done a lot of other work together. So I was so happy when he started a project in the crypto space. He was always the behind the scenes guy, but not anymore. Now he has a fund, Lightning Ventures. I am a part of that fund as well as an LP. And he's going to talk about what that fund is and where it's going and where its future is. So a little round of applause from us.
All right. All right. For the record, I think Tone still owes me $80 for that power supply. I'm not quite sure from 2015 there if I ever got paid on that. All right. So the most exciting, dangerous, thrilling, gnarliest thing that you can do in life, we all know, is sex, drugs, and rock and roll. But just under that is angel investing. I assure you, just under sex, drugs, and rock and roll, you can get a thrill out of investing in early stage companies. We're going to talk about private markets. We're going to talk about early stage investing technology companies, and most specifically, Bitcoin companies. So has anyone in here invested in a private company? All right, few hands. What about founders that have gotten equity from a company that vests over time? All right, so hopefully you get a few things in this that are helpful to you. All right, so PSAs, let's get them out of the way. Investing in Bitcoin is not a substitute for buying Bitcoin, not meant to be. This is not meant to replace it. When in doubt, ass first. Always stack sats, right? You're going to be stacking sats for the rest of your life, and it never stops. So that's first, right? But let's say that you have like a ton of Bitcoin, right? Like Doug Scribner here, maybe, I don't know, or maybe he lost it all, I don't know. But you don't want to sell. You don't want to sell a very meaningful amount to go ahead and invest in companies, right? You don't want to not have enough Bitcoin, right? But I do believe it's the best way that you can sort of supplement your HODL position, right? Complement it. Okay, and just like HODLing, low time preference required.
Hey, Muzz, can you do a screen share?
Oh shit.
So good.
All right.
It was good before, because we were looking at you.
Okay. Screen share and okay. Is that it?
Yep.
All right, so that's our PSA there. Okay, we're gonna go quick. All right, so who am I? My notes for this slide are keep it short, no one cares. I was in the music business for 10 plus years. I'm a late 2012, or I was corrected the other day by Andy. I'm an early 2013 Bitcoiner. And you see those faces of meth, where the people with the drug problems, I am the faces of meth for angel investing. Okay, that says I've invested in over 1,500 private companies. That's over 2,000 actual deals when you count follow-ons. So I need AA, I need Angels Anonymous. I'm going to start a support group there. And my company is Lightning Ventures, which is most specifically investing in Bitcoin companies. So we're all Bitcoiners here. There might be a lot of crypto stuff here, but some people don't know the different types of businesses that exist, right? So these are companies that we've invested through Lightning Ventures or myself personally. And there's a big swing here, okay? There's a full spectrum of companies, right? You have Galloy, which is building, fintech infrastructure, right? Things like Bitcoin Beach Wallet for communities and governments around the world, right? They're building that kind of Marqeta Stripe sort of back end. And then you have US Bitcoin Corp, right? They're a mining company. You have Start9, which isn't even totally a Bitcoin company, right? Decentralized, your own secure private server in your house. Levels, Financial, Impervious, they're making a browser, right? We've got a couple of phone wallets here, Breeze Wallet, Pleb Lab, they are an accelerator in Austin, right? Azteco, Thunder Games in gaming, Starbackers, kind of like a value for value type of OnlyFans-ish Bitcoin sort of company. Voltage, they're spinning up nodes. So there's a lot of stuff that you can invest in with Bitcoin companies, okay? And that is what we focus on here at Lightning Ventures. And also, why Bitcoin companies, right? Why are we doing this? Well, if we're early to Bitcoin, we're like mad early for this stuff. You know what I'm saying? We are like as early can be with investing in Bitcoin companies. So let's move it on. All right, let's select a player. Who do we have here? Let's go over the players in the game. First, we've got the venture capitalists, right? The evil VC, right? Nobody likes them. Just like every industry, lawyers, insurance brokers, there are some shitty people, right? But don't think that all VCs are in fact shitty. But what do? They take invested capital, right? Pooled capital, and they invest it on behalf of their limited partners. And if they are successful, they receive fees based on that. All right, and then next we have the angel investor, okay, the lone soldier. That is you investing your own money, usually smaller checks, and you get to make all those decisions yourself. So you can choose that player if you like. Scouts and advisors. Okay, scouts and advisors, you're not even investing money. Why are they a player in the game? Because you're investing time. You can invest your time to earn equity and essentially do the same thing, right? So scouts, that's nothing new. You refer a deal or a founder or whatever, you're rewarded on that. And if you're talented enough to be an advisor for some companies, then you earn equity as well. Okay, private equity, these are the bad guys, right? If there was a bad guy like a King Koopa or something, all right, private equities, they're the guys who come into really late stage rounds, they gut the company, they fire everybody, they're terrible people, and they make tons of money. All right, and then we have limited partners. So that's easy, right? You're a limited partner, you're an LP in a fund, and just that, right? You're limited, right? What can you do? Not a whole lot. So that is some of the players in our game.
Yeah, the screen share wasn't flipping your slide, so I just moved the camera to face.
Okay, real quick, not to do a ton on this, but pros and cons, right? It's illiquid. So you're stuck in these things for a while. Liquidity is coming to private markets, but for me, that's actually a pro because I'm not a very good trader. I would have certainly lost the contest yesterday. I like to just invest and then be done with it. I don't like to make decisions every day. The price changes. Do I buy more? Do I sell more? Do I sell half? All of that stuff doesn't happen with private markets. You pretty much just make your investment and then you cheerlead them till death do you part. Okay, you can write these things off. You can also get YOLO gains. You get to see rad shit. Okay, you get to see stuff that's happening all over, clothes that are Faraday cages that you sleep in, gas stations in outer space, and vegan tennis shoes, dogs that make, pills that make your dog live longer. And like, there's crazy stuff, right? But you get to see all that, and that's really cool. It's legal and regulated, and you can be impactful. You can actually make a difference, right? Where if you, email a publicly traded company, they'd probably tell you to get lost. Yes, it's a liquid. You can lose it all. You got cap gains and KYC. It can be very addicting. There are some fees, and it takes time. Okay, how to play. All right, these are our little areas here. We have funds, okay, crowdfunding, secondaries, direct investments, and syndicates. Okay, so what's a fund? A fund is I'm going to give this guy some of my money. I'm going to be one of those LPs. He's going to turn that money into a whole bunch of more money, and then he's going to give me most of that. That's what they're supposed to do, right? So what are the difference with funds? Well, you have no say. Okay, you're trusting this professional that he's investing your money. You have nada, bupkis, no influence whatsoever. High minimums, okay? It's not cheap to get into a lot of these funds. and higher fees, okay? But you don't have to make the decisions. You can go about your daily life and go to work and not be thinking and reading, deal memos with no shirt at 2 o'clock in the morning while your wife's screaming, "What are you doing in there?" All right. And that's really what ends up happening. All right. Crowdfunding. Okay. Crowdfunding. You go on these platforms, right? Seed Invest, Republic, all of these kind of things. And that's for everybody, right? You can invest $100 and anyone can do that. It's very cheap. There are low fees, except the investments are normally terrible. Okay, that's the only problem. So every once in a while, you can find a diamond on one of these crowdfunding things. But when you go on one of these websites and it's a kombucha company in Ohio or something, that just don't. You better just know what you're doing. All right. So secondaries. All right. Let's say that you worked or were an early employee at a Bitcoin company or any company for that matter, and you have a life event. You need some money. You need your daughter's getting married, you're having a kid, you're buying a house, whatever you're doing, it's not a bad indication of that company, but you might want to take some money off the table. So maybe you call the Muzzman or one of these secondary platforms and say, I want to sell $500,000, and they ball that up and they send it out to accredited investors, which we're going to touch on here in a second. And they fill that deal. And then that deal is subject to a ROFR, a right of first refusal. They'll bring that share transfer to the next board meeting and they'll say, hey, this guy wants to sell a bunch of his stock. Do we approve it or, deny it? Now, if they don't, they exercise their right, they have to buy those shares regardless from that guy. So it's kind of a win-win for him. And then all those investors in the deal, they just get their money back in a really I'm sorry letter, and life continues after that. So those are secondaries. Definitely a way you can participate in private markets. Now, early stage stuff like Bitcoin companies, things that are worth 10 to $50 million, there's really no secondary market, right? It's only once you get to a certain level that you can do that. Direct investments, okay, kind of scary, but kind of cool. You're at an event like this, some guy says, hey, here's my awesome company. And you say, you know what? I heard Muzz talk about angel investing for 10 minutes. I think I can do this myself. And then you just wire that guy 50 grand, okay? There's pros and cons here. What are the pros? Very low fees, right? Because there's nothing between you and that founder. You're just saying, here's 50 G's. But then you're kind of on your own. You're reviewing that safe note and the documents, and there's a lot of stuff that goes in there. Is it boilerplate? There's some other kind of things that you have to do yourself. And then you also don't have anyone watching your back as far as the signaling or why did you invest in that company? You're kind of on your own. Also high minimums, because companies, they can't take $2 grand from you. Okay. And then we have syndicates. Yay. My favorite. Okay. These are groups of angel investors, sometimes geographically located, right? Like maybe there's an Austin, Texas Angels. Maybe there's a New York City Angels, Miami Tech Investors, a lot of real estate groups. But these are groups of, accomplished people that all want to invest in one specific, in one company and then be as value add as they can. Okay. So like my goal with the Lightning Venture Syndicate is to have the best group of folks that can come together that are all experts on something, right? So if a Bitcoin only company says, hey, we want like a really cool, a YouTube channel that's Bitcoin only, we're rolling out this affiliate thing, and Tone's in our network, that's a great value add. If Ben Gagnon is in our network and all of a sudden a mining deal comes in and Ben reads it and he's like, hey, this is pretty freaking cool. I think we could partner with them at Bitfarms. Would you mind giving me a warm intro to that founder? That would be very helpful too, right? So everyone's an expert on something. And that is the syndicate. So these are the ways that you can invest right here. Any questions? We're going fast. All right. So accredited versus non-accredited. This is the biggest scam ever, okay? People should be protesting in the streets in front of the SEC over this nonsense. This is terrible, okay? You can walk into any casino in America. You can lose your life savings, okay, on 3 hands of blackjack, but the government will not let you invest $1,000 in an early stage technology company because you are unsophisticated. Give me a fucking break. All right, but that's getting better, okay? It's getting better. They're lowering the standards for that whole thing. And the crowdfunding act, the Jobs Act, right? It was 2012, Barack Obama. It's Jumpstart Our Business Startups. That was what made these crowdfunding things happen, right? Founders could not raise directly from public. They couldn't advertise things. And people were very limited on what they could invest in, right? So there's a few exemptions. You could have a Series 7 or 65. The government says that's fine. Your family office or business with $5 million, that's fine too. Or quote unquote, knowledgeable employees at certain investment funds. What does that mean? No freaking idea, all right? But that is the definition. And you can invest in everything when you're accredited. When you're non-accredited, the government kind of keeps you on this little playpen area. Oh, you want to do some real estate? That's fine. Oh, peer-to-peer lending, you know, lending tree, whatever, that's fine. You can have your metals, your aged wine, right? The government was like, you want to invest in aged wine? That's fine. Artwork, collectibles, crowdfunding, Reg A, and of course, Bitcoin. All right, but we're all accredited in this room, right? And if you're not accredited, it's a self-certification process, which I find very interesting, okay?
Actually, I'm asking our someone who knows their double batteries, what these things are. We run out.
If you want double batteries, they can solve a problem right now.
So self-certification, right? The government says, hey, click the right button and you're accredited. Okay, that's the main thing to remember, right? When you're thinking about, am I accredited or not? You must click the right button. And they have that by design as it's a self-certification process. There are a few platforms that may ask you to upload a letter from your CPA or something, but the vast majority of them out there is relying on you to click the right button. Okay, deal flow. How do we crank this up? Well, we got a lot of platforms here. Some of them are crowdfunding ones. Some of them are groups, right? Space Angels. This is a group of angels that just invest in space stuff. That's what they do. AngelList, which is where we manage our Lightning Ventures platform. Micro Ventures, they do a lot of secondaries and crowdfunding stuff. Start Engine, WeFunder, Republic, they're doing a lot of crowdfunding stuff. La Quinto, they're doing just secondaries. Zoogler, right, which is ex-Googler. They have a network full of their like alumni, okay? And there's one for every company. There's ex-DoorDash people, there's ex-Ubers, there's ex-Slack, there's ex-Palantir. All these big tech companies, when people leave, they usually form their own sort of angel groups that invest in those companies, support those people that they used to work with. And of course, they're very good deals and they're ridiculously smart people. And if you're lucky enough to get into their deal flow, you might see some really cool stuff. So these are the places where you can kind of crank up some of your deal flow. Okay, say what? Not going to take too long here because there's so much. This is like years to learn and a lifetime to master. This is just, it never gets old, the things that can happen. Honest to God, you could spend your whole life studying all this stuff. Why is 2 co-founders better than 1? If I'm investing in 1 co-founder, does he have to be technical? Why is it best to invest in 2 co-founders and they're both technical? Did they work together previously? All of these kind of things that you learn when you start studying the art of investing in private companies all come into play. So we're not going to get too boring with, you know, liquidation preferences and most favored nations clauses. We're just going to get excited and learn a little bit more about how to participate and have some fun. Okay, these are the type of securities, okay, that you will see. You'll see priced rounds, which are also called equities, convertible debt or other notes, because there's a lot of different versions of convertible debt. There's safe notes, and then there's tokens and scams. So equity. Equity is the only time where a founder takes an investment and he knows exactly how much of that company he sold, and the investor knows exactly how much he bought. All of these other things, you know, you see a safe note and a cap and a discount and, you know, convertible debt. You don't really know how much of that company you have or at what price you are investing. You just have some sort of framework for what it's between. Okay, so the most protections for investors are equity priced rounds. That is as good as it gets. That is what usually happens at the Series A level. Those are all the big boys. Okay, they are not investing in some of these other things. Okay, convertible debt came popular in the 90s. It was really cheap. Okay, because you have a lot less legal and you can do convertible debt rounds very quickly. So during the tech bubble and in the 90s, convertible debt was hot. Okay, but what is it? It's debt. Somebody owes someone something. Okay, there's a maturity date. There's an interest rate. There's a cap. There's a discount. there's a lot of other things that go into convertible debt. You have less investor protections, but better than what we're getting to. So then in 2013, Y Combinator, arguably the most famous accelerator, they said, well, convertible debt's cool, but let's take out all the stuff that we don't like about it, and we'll create this new thing called a safe note, which is actually the least safest for an investor. That's kind of misleading, okay? They call it a safe note, but if that's what you're investing in, it is not the safest for you. And that's a simple agreement for future equity, right? That's a mouthful. All right, so what did they get rid of? Well, they got rid of the debt aspect of it. They got rid of the maturity rate date. They got rid of the interest rate, and they're just keeping a cap and a discount, okay? So Abby has a business. What's it worth? She says somewhere, we can both agree it's worth somewhere between $0 and $10 million, okay? Somewhere between 0 and 10 million, right? So we establish a cap, kind of a ceiling, and we invest in that. Now, what happens if her next round, it's worth 100 million, right? That's a nice 10x markup there, okay? But I'm capped at the 10 million. So my investment will convert, okay? At the same time, those next investors are investing at that 100 million, I'll convert as if it was the 10 into those shares, okay? So that's how that works. This is all boring stuff, but it's stuff that you're gonna see. And then there's tokens and other scams. There's SAF, simple agreement for future tokens. I've never invested in one. I wouldn't do it, but there's a lot of these sort of things that are out there too. All right. Real quick, general capital guidelines. Now, these are changing every day because we're living in a crazy world, but pre-seed, they're usually raising 250K to maybe $1 million. Seed is 1 to 3, a series A, 3 to 10, which that's up a little bit lately, B, and so on, right? The pre-seed is usually friends and family, accelerators, little angels, and then the seed, you have, I guess, micro VCs, which I would possibly consider ourselves, and some small funds, and then so on to VCs. So real quick, what not to do. Don't write a ton of big checks into small amounts of deals. This is how everyone fails. They say, oh, angel investing, I put 50K into 2 deals. They both went to 0. That is terrible. That is a surefire way to go broke. And what you want to do is invest small amounts into a lot of deals. A lot of people are playing poker here at the financial summit, right? So if you're a poker player, you kind of want to see some flops. You kind of want to maybe invest a small amount into something that looks really good, and then wait and see what happens. Wait for material progress. And what I mean by material progress is if you invest in a company at a $10 million cap, and they raise again at maybe a $12 million cap, and you're reading the deal and not much has changed. Their sales are not exploding. They haven't made a bunch of hires. Things are not going great. You don't just invest in every company because you have the opportunity to, right? You want there to be material progress. And if you invest in, say, 30 companies, okay, you'll see who's breaking out. And once they break out, that's when you hit those winners hard. That's when you can invest more later, because you can always invest more later, okay? But you can't get it back. So that's a one-way street. Also, caution, biotech, medical devices, drugs, great way to lose all your money, I promise you. Aerospace, things that are going in outer space. I know back there, he's putting a Dogecoin thing in outer space or something. You know, those are not my cup of tea. They're tough to invest in those type of things. So just be careful. And then uncapped notes, always a no. And an uncapped note is if we couldn't agree on what Abby's company was worth, and she says, no cap, okay? It's going to the moon and you'll get a discount on the next round. That whole move from 10 million to 100, I wouldn't have been locked at the 10. I would have converted at maybe a 20 to 30% discount on that 100 million. I missed the whole move, and you don't want to do anything like that. Okay, so winners, small checks and many deals, last money in, that is the goal. You want to be the last money into every quality deal that you can find. And I mean by last money in is, okay, this company's raising $5 million, and this VC is leading the round with 2.3 million, and another VC's in for 2 million. And you know, Jay-Z's in, and Will Smith is in, a bunch of these other people are in, and this is the greatest thing since sliced bread. And then there's a small little 100K. There's a small little $100,000 allocation that's coming through a syndicate. And you're doing the math in your head, and you're like, this is literally the last money in that deal, okay? They're all in, everyone's in. And if you can be the last $1,000 in that deal, that is exactly where you want to be. So you might want to invest more than 1,000. I'm just saying that's what you want. You want to look for that signaling hard, because you're getting essentially the same deal, the same terms, the same everything as those suits that are leading the round. Okay, and then hit the winners hard after they break out. Okay, so real quick, just a few things. SoftBank famously invested $20 million in Alibaba to the tune of 143 billion. So, you know, I was in the music business for a while, and it's the only thing that I ever found, you know, that you could have a 90% failure rate and still be like wildly successful. Okay, you're a major label and like everything sucks and like all these bands are terrible, and that one pop star like makes up for all the failures and like everything else and like keeps your company. VC land in angel investing or early stage investing in general is really the only other place where I've ever seen where you can get a return like that. Okay, Airbnb famously 20K in the seed round, $2 billion at the IPO. That's a spicy meatball right there. But it also took 10 years. Okay, so you're sitting around for 10 years, and remember, these things aren't liquid. Now, liquidity is coming to these markets. It's coming all the time, but chances are you want to assume that you can't get out of these things. Okay, Coinbase, it was 20 cents in the Series A round. 7 years later, that's a 4,000x return. WhatsApp, Sequoia, $60 million turned into 3 billion. What's interesting about that to me is that only took 3 years. That's not really a long time. Jason Calacanis famously put $25,000 in the seed round of Uber. 9 years later, that was 100 million clams. And then Google, Series B, 12.5 million. That was in 99. And in 05, that was worth 4.3 billion. So, you know, I'm not a meme stock guy. I'm not a YOLO, whatever those groups are, Wall Street bets or shit, altcoins or different things like that. But I don't know where else you can get these kind of returns. Oh, no, no, BlockFi, no. What'd you do? What'd you do to me? Like getting shot in the chest with BlockFi. Wow. But always learning, right? And I'm happy to tell you how terrible this was, so you hopefully never do anything like it. So what are these different outcomes you can have? There's so many different outcomes, right? There's IPOs, and then there's SPACs, and there's direct listings, and there's lockup periods, and companies are reverse merging, and they're acqui-hired, they're acquired, they're dissolved. Good Lord, there's a million things. Never did I ever think a company like BlockFi, which is still in business, would wipe every investor. That actually happens. You can still be a company and we just gone, like everything, zero, right? But that's exactly what happened. Everyone got wiped. Who else got wiped? All those employees, all that equity, everyone sitting on those nice fat gains. Thought we were so smart with BlockFi. That's what you get for shitcoin, right? That is what I get. So that was not good. And to go from, okay, BlockFi is worth $400 million, and within very short order, they're worth 3 billion, right? I thought I knew what I was doing. And then within very short order after that, they're worth 5.25 billion. 5.25 billion for 400 million. Zero. Nada. Gone. It's like it's over. Check your consolidated K1. You'll see it on there. Zero. End of story. But yeah, those are the things that can happen. So don't let that happen to you, right? Don't shitcoin. That's it. Some resources. This is a great book. Definitely worth reading. Very easy to read. CB Insights, Crunchbase, all these things cost money, but if you're going to invest in like a couple thousand companies, then you're going to have to like keep an eye on everything that they do, right? They could open a new office or hire someone. So if you set these up right with Owler and PitchBook, this is called Venture Hacks. If you ever Google Venture Hacks, great reading on the way home. And then Venture Deals is also a really, really good book that'll have like tons of reference. It's awesome. Okay, and then finally, this is the end. This is just what we do. So we raise, go back one. I'll just send it to you, Doug. Okay, so we raised one fund. That was kind of our first little proof of concept. It was a low 7-figure fund. And at the last financial summit during the bull market, Tone let me say a few things, and people were so excited to invest. Everyone wanted to invest, and the fund was closed. The fund was closed. People were dying to invest, and the fund was closed. And here we are at a bear market. it's a whole different story, you know. Everything is slowing down a little bit, you know. But we're getting ready to go ahead. We're getting ready to raise a second fund, right, which is coming soon, like very soon, within the next week or so. And then the syndicate, right, which you can join and get access to whatever we're doing on a deal by deal basis. And the minimum is always $1,000 to get started. And you'll get to see really, really cool companies like what we have that we've invested in so far. You get to read all their updates, be impactful, and it can lead to great business opportunities. It can be great. So we're gonna see what happened, and that is it for me, guys. Thanks so much. Does anyone have a question?
Well,
No question.
Actually, do a panel, like the DC panel, so you're sticking around.
Yeah.
So people could ask you questions on this, so they don't like lose much time. And I wanted to, yeah, any. Put it out to we got a fact. This is also everybody came. Finally. Those are the directions. It was like a perfect time for you to like finish the next financial summit. So guys, keep in mind, I'm going to tell you, we dropped the price of the Bali event by $1,000, but only this week. So the price goes back to its normal price of $9K. But this week, since I'm live streaming, I guess it's open for everyone, but it was supposed to be just for the cool kids. Like this week, $8,000 for Bali and $1,000 discount. The Bali event is amazing. Buzz has been there. I'm not going to name names for the cameras, but a few other people here have been there as well. That's my only announcement for now. Other than that, dinner tonight. You already met new friends. The official dinner is tomorrow night. Melissa, you're still here. Because she has thrown out the lead. So Melissa is going to be teaching at doing her presentation on mindset and many other amazing things. 10 a.m. tomorrow. I'm not sure which room, this room or the big room. Okay, but like in here. So in here at 10 a.m. So the whole group is here. So all right, let's do a little panel. Ready to go for it? Sure. All right, come on up. And who else on the VC stage? Otherwise, I have to get Doug up here.
Get Jason up here.
Jason?
And Doug, yeah, for sure. Yeah, right.
Well, it's good lessons.
I can tell you what's next.
Right. So if there's anybody else here that feel that they're confident, because the way this event works is we get our speakers from the entities themselves. Everyone that comes here is a successful financial professional, and they have incredible knowledge to share. So I would love one more. Jason? So these other.
Should I take this off?
No, you leave that on. Let me just also computer. Okay. This one works. Muzz, you do a good job moderating. There you go. But you're also gonna sort of how much here. And
All right, Ray. What are we talking about? Anything? Because I got some questions for this guy right here. You know, he's been doing a lot of this stuff for a long time, like since the bow and arrow was top secret. You know what I mean? He's had many different licenses, FINRA designations, and all that stuff. And he's got a pretty cool platform to help investors discover funds. So maybe you want to just tell everyone a little bit about yourself and your platform that you're building out, and then
Sure.
pass it down to Jason.
That's exactly work. Yeah. How you doing, everybody? I'm Ray Murphy. I've about 35 years of traditional Wall Street experience. I got sought out by a couple of young founders who set up a platform, which is a marketplace for funds, including VC funds. And we do the due diligence on these funds. We curate them. We do AI on the underlying companies, portfolio companies, like he showed what Muzz is invested in. We would do a deep dive on his check writing habits and how successful he's been, how early stage he got into them, and all that is graphed presented to the allocator side of our platform to shorten their time, due diligence, expense, et cetera, and make a transparent platform for ease for larger allocators. We don't really deal with accredited type individuals, but we may get to that stage in the future.
Tone, no good.
I'm Jason. I'm one of the co-founders of the Bitcoin meetup in Philadelphia.
Louder.
Bitcoin meetup in Philadelphia. So that kind of running those kind of events, kind of you meet people, and at the time there was these two guys that were at Wharton. They came to meet up, learned about Bitcoin, tried to buy Bitcoin, realized it was a nightmare. Realized it was a nightmare trying to buy Bitcoin this way. There we go. Okay. Tried to buy Bitcoin, realized it was a nightmare. Said let's start a Bitcoin ATM company, and then they had the first Bitcoin ATM company in the U.S., not North America, but the U.S. in Boston South Station. That's been quite an interesting journey. So I've been advising that company because I'm in the traditional fiat ATM space. So directly applicable. We just got acquired by NCR, which is the largest cash register company in the world. That's very, very exciting. It's really happening, seeing, they want to make it so you can they want to use, Bitcoin as the new payment rail and basically get rid of specifically Lightning-based stablecoins. Get Visa, MasterCard out of them. And when you get inside the payments networks, you realize what a Byzantine nightmare it is. It makes the case for payments. Okay, sorry, going off a little rant there. But so now I'm also doing some venture investing. Made some terrible decisions, and I just had an hour with. Really impressive what you have to say. The way you're able to. It's something that you can do, but you just have to do little bite-sized things instead of meeting some charming bald Australian man and just throwing money at him. There's a way to do it right. And so I'm learning, but also it's fun.
So Jason is a major baller with the ATM space, right? With Liberty X and with the fiat stuff, right? Which is why he's cool to have in your syndicate, because if you were working with a company like Azteco, which is doing kind of a different type of Bitcoin voucher global distribution model, you have people there that can do that, right? That's his thing. He's also an LP in Trammell Ventures Fund, which is a Bitcoin only fund. Matt Snow and the good people over there. He went to their event in Miami. They have a great portfolio, but that's a Bitcoin only type of thing as an LP, right? Learning from them, reading their quarterly updates and everything that they do. So when people are on the platform, okay, because that is a hard part, is the deal flow. How do you analyze these things? If you're a fund investor, okay, this VC panel in the Dominican Republic, I'm going to go and I'm going to invest in funds, and they get on there. They're looking at things that are vetted by you, right? That you've vetted, all right, with AI and whatever. But are all funds, how do you get access to all the funds, right? Or is that limited to who's on your platform? Or how does the typical person kind of get access and invest in funds? You're solving a problem. What I'm asking is before the problem that you're solving with Velvet, what did people do?
It was the old boys club. That was the only way you could really get access to the hot funds that were out there. And a lot of these allocators are RIAs, some of the traditional allocators. It's all word of mouth. It's all golf course business until now, where we kind of level the playing field a little, a lot more. The allocators come on to VelvetFS.com. Write that down. It's our website. The allocators come on for free, so they get to browse all the funds free of charge. Fund managers will pay a fee if they are funded. So that's how we generate our revenue. We find funds basically through network. It's all referral business.
Don't mind me, guys. The wig.
Yeah, so our funds come on, I think that was your question, through a referral business, and then we do our due diligence at a broker dealer level. Our carve out with FINRA, our agreement is that we can list and allow allocators to browse, but we don't pitch or sell or direct to the funds. We just lay out all of their data and what we have found as far as their investability through our due diligence.
So, Jason, how did you discover the deals that you invested in? And what made you make your LP investment into that Bitcoin only fund? Were you approached? Did you just had too much money and you wanted to put it somewhere, or what happened?
You know, being a Bitcoiner, you're in a unique position of I have to try and beat Bitcoin, and there's just nothing else that I feel could beat that kind of return on a long-term basis. But I was at Guns and Bitcoin in Austin and met Sky Parker, who was an advisor at UEB, and they were actually trying to do it in a really unique way, this feeder fund where you could take your Bitcoin and just post it as collateral to get USD to invest in the fund. And as a hodler, you're like, okay, that's actually a nice way to do it. Turned out the terms were terrible. It was better to just, get some USD and made sense to, just get the USD and invest that. But the pitch was, it's an investment in the entire ecosystem, and TDP is trying to build infrastructure, Bitcoin infrastructure, micro payments, like all of the industrial level stuff, it's like the layer 3, I guess, the layer 3 stuff that we need, and that's a really compelling argument. And it's really the first time somebody had convinced me to peel something off and put it with some people. And so I've been to the 2 investor meetings now, both of them were in Miami, and they're nice, quite nice at the time. But you get to see the presentations, and it was very validating. And I was like, okay, I'm in the right place. Like having everybody go up there and all the projects are presenting, and like I was stoked that I was putting my money into these people and these projects that eventually you just get tired. You got to do something. You gotta keep going. And we all just sit back and try and enjoy our sick games or whatever, not actually, and just stop. Like it's not gonna work. We all have to keep going and pushing the space forward.
All right. So, okay. All right. Does anyone want to chat about anything before I start asking them about investments? Didn't work out. In the back, the tall drink of water back there. Piking. Piking is such a funny word. It means a gambler who makes small bets. And you can look up the history of this word. It was a very popular word. It's known as a piker, right? I think it was also in the movie Rounders. I think Matt Damon says it in Rounders. But basically, the guy's a piker, right? And that's kind of what you want to do, or at least what I want to do with angel investing or investing in general, or with anything that you do, right? Even if you're investing in funds. If you were going to invest $250,000 in funds, you'd probably be best to split it between 2 or 3. That's just everything. If you were working on your marketing budget for your startup company and it was $25,000, you'd probably be better off sponsoring 10 events for $2,500 than one big conference for $25,000. I don't know, right? So in the data model that I would like to say that I'm building, but I'm really not, because I'm not good at building data stuff. When you have that many companies, you have a variety of outcomes, and as long as you're investing a small amount in each deal, there's so much to learn. There's so much to learn. Everything, they go to zero, guys. I mean, the BlockFi thing was a big surprise. That tall drink of water that just asked this question, we both invested in a company called Airlift, which was Southeast Asia's largest private company. This was the super app. This was the Uber Eats, the this, the that, and da-da-da, and it's fresh out of YC, and it's the hottest company in the world, and yada, yada, yada. And it's worth $12 million. And you invest a little bit, and then it's worth 30 million, and then 85 million, and then 500 million. And then on the front page of TechCrunch, Airlift shutting down, going to zero, it's over. Just like that, from 12 million to 500 million and then zero, right? So anything can happen. So I like to joke about piking because it's investing, small amounts into a lot of different companies. And I think that you should be a piker if you have the chance. Does anyone else have questions for this LP here with some angel investing experience and a titan in the space, and this guy right here with various FINRA licenses and a platform? You, sir.
You talk about it. I got a question.
Can't hear
Yeah.
Shout it out, my man.
Very short. The oldest thing in man is real estate. How do y'all do real estate?
If I didn't believe that investing in Bitcoin companies was better than just holding Bitcoin or any other asset class, I wouldn't be doing any of this. I'd be at the pool right now. I mean, there's just like, how do you beat real estate with this stuff? Extremely easily. That's not difficult to do. That is like ridiculously easy to do. I mean, these things, well, what do you get? A typical cap rate on a real estate deal, if you're lucky, is like 10, 12%, right? I mean, okay, fine, you get to 20%. And these things are going up 1000x, man. I mean, I've got things in my portfolio, luckily in the Piker portfolio, that are up 125x in a year and a half. In African fintech company, cover of TechCrunch, now it's worth $2 billion. These type of things happen. Now, it doesn't mean anything because just 2 weeks ago, I got an email saying that this company's going to zero, with an apology letter from the founder. So it doesn't really mean anything, but you're never going to get that with a house. You can't buy a multifamily in North Carolina, get 125x your money ever, period, right? The beginning of Earth, mankind, to be Adam and Eve. I mean, when do I have to get in? Where's the cost basis? The Garden of Eden?
You say real estate, that's why I say real estate. I don't do real estate. I'm talking about when you say real estate, it's 75 to 100%. That's why you do it. But we start at zero. You set your numbers to get the number that you desire based on the development that you're doing. And you never, this 1950 house is still being built over and over. It's like it started at $5. I had a house and I bought $10,000. And since the wire on the grade, it's not a house for $300,000. What I'm saying, you have to see it depending on what your model is doing. But I want to know, I see it. But they do the same thing. What's the difference why I like to stay with you? It's because yours is here in fintech. But that house need to be with fintech. They're not separate. That's the only thing I'm saying. It's not separate. They're trying to separate, but it's not. They need each other.
Tone and Doug Scribner will tell you what you need is you need a token on a blockchain that represents, no, I'm just kidding with you. Look, you got to have a mix of different stuff, right? You have different buckets, right? He owns a ton of houses. I don't want to dox him, but more than one or only one. I don't know how many, but you have to have everything, right? You have to invest in cool companies. You hold Bitcoin. Maybe you have income producing assets. I don't know. You want to have everything, right? Better or worse, all or nothing. I don't know.
All right, one more question.
What was the website you're referring to about
Talking to me or
Velvet?
how we start investing with Velvet?
Yes, Bob.
We deal pretty much with the institutional size allocators.
So there aren't $25,000 funds on there with smaller minimums?
Not that small, probably 150, 200. Okay.
Huh.
Yeah, we are, catering to a larger allocator. But back to the Piker concept, we do offer, and it was built into our plan to have the ability to do basket type of approach for allocators. So they can come on and through drop-down tabs, they can find similar types of funds to get into. And you'll have, you can choose 10 or 15 or 20 of them rather than having all your money in one basket, one company, and kind of do the same thing on a more of an institutional level, a big Piker.
Yeah. Just one Just one more thing on that. Listen, guys, it's always negotiable too. Okay, if you see one of these funds that you really want to invest in, you're like, oh man, the minimum's 100K or 150K. You'd be surprised what just asking gets you. Like, hey, you know what? It's a lot. Can I come in for this? And a lot of times it's going to be a yes, right? That's what I should do, right? I should have a high minimum and then bring it down. But instead, I have a low minimum because I think that's what people should do. You know what I mean? You invest more if you want, but invest a small amount. So if you were investing 100K, there are 4 cool boutique emerging funds that you could invest 25K in each of them and then learn from all of them. Closing, my man.
I think every fund I've looked at, they started at 250K minimum and then it dropped down to like 50 to 25K. So it's just like they're just throwing these bullshit numbers out there. So don't get scared off by the.
All right, awesome. Thank you so much, guys. All right, we're gonna move on to the mining talk. So you can ask some questions. We have 2 presentations, real quick, and then we're also gonna do a panel. Brandon, do you want to join us on that? A lot of people have questions for you with this stuff. Anyone else here in the mining?
Yes, I am.
You're in mining. Anybody else? All right, so we might bring up some people for the mining panel. Ben, come on up. I still want to play a video of volumes so you guys see at some point. It doesn't go with that. All right, Buzz, you're still wired to another one? Yeah, I don't want to take a break because everybody scatters. I'm gonna power through it.
Could you send me a link to
Zoom? I'll do that right now. Okay. That's a back.
okay.
Do you need a mic? No.
This is for the live stream?
Yeah. It's for the
And then this is for the room.
Yeah.
Okay.
There's a clicker for your slides.
I'm popping around in my model here.
These things. That's for you. That's for me. I'll drop you a link now. Don't do. All right, you got it.
Yep.
You also sit in front of the camera, so I can see over here.
Okay.
Just plug that in. I don't have the camera on you yet. They can just do screen share.
Yeah. Perfect.
You enjoy video, and then mute your audio.
Okay. Yep. Muted. Wait, do I want to have it muted if I have this?
No,
Oh, this is for that.
is
Okay,
going
got
to
it.
be.
Yeah, yeah. Okay, so I'm all muted.
So you said, got it.
Got it.
All right, guys. Oh, quick intro. As well, we just see about that. About trying to do much with video as well. All right, put the camera on Ben. There he is. All right. So Ben and I met 1 year ago at an event called Mining Disrupt. We both just came back from Mining Disrupt. Pretty much came straight here. I did a great job at the last financial summit. Everyone wanted to do more, so we have to bring him back because we have a completely different group of people. Ben, welcome back. Quick intros, who you are, what you do, and tell us something about mining we don't know.
All right. Great. Great. Talk that I finally contribute something to. So my name is Ben Gagnon. I'm the Chief Mining Officer of a company called Bitfarms. We're a publicly traded Bitcoin mining company. We do about almost 2% of the Bitcoin network. So we're mining about 17 Bitcoins a day right now. We power a little under 4 exahash of the network. We've got 9 different sites that we operate. 7 of them are in Quebec, Canada. We have 1 site in Washington and 1 site in Paraguay, with a 10th site under construction in Argentina. So we're a huge company, been around for a long time. Personally, I've been in mining since 2015 full time. I tried buying my first miners from Butterfly Labs back in 2013. I still have the receipt. I never got my miners. And that was my first entrance into Bitcoin mining, was getting screwed. And this is a lot of people's first entrance into the space is getting duped by somebody, sending somebody your money that you met online and never getting anything back in return, which is sad because mining is a derivative of Bitcoin. And if you want to get into Bitcoin, mining is a way that should be more safe, right? Than just buying the coins, because it's a cash flow of coins over time. And that's what's really cool and exciting about this space, is that we are talking about cash flows in Bitcoin. Now, nobody knows exactly what those cash flows are going to be worth in US dollars. But when you look at how Bitcoin mining works, I know that when I buy a miner, if I plug it in and I can keep it online, I'm very comfortable that in one day I'm going to get this many Bitcoins, 7 days this many, in 30 days, in 6 months, 12 months, in 18 months. I can predict exactly how much Bitcoin that I'm going to generate with that machine. And so if you're valuing that Bitcoin miner in the price of Bitcoin, you're comparing it to the revenues of Bitcoin that miner is going to generate. You actually have an investment that even in a unit of account like Bitcoin, you can predictably generate a yield. And that's a very, very difficult thing. There's a lot of things out there that can generate yield in USD. There's almost nothing that can guarantee you a yield in the base unit of Bitcoin. But that's what Bitcoin mining is. That's what it's about. And that's why I love this space. What I have up here is basically the value of Bitcoin mining computation. There's basically 3 different ways to get paid. People think that it's still about, hey, I've got to have luck. I actually have to find a block. Honestly, I never have to find a block to get paid. I provide my hash rate to a third party. The third party takes the risk on whether or not they find a block, and I get a guaranteed payout irregardless, right? So I don't have any risk. It's part of how we try and de-risk the business as much as possible. I take no risk on that, and the pool provides me a payout. It can provide me one of 3 different methods of calculating the payout. There's pay per share, which is the PPS methodology. This is kind of an older methodology. This is based on what your difficulty is. So for that difficulty adjustment cycle, whatever that difficulty adjustment is, that determines how much Bitcoin I'm going to get per unit of hash rate. Now, the FPPS came into place because pools were trying to be more competitive, so they started lumping in the transaction fees. Before that, pools would take the transaction fees, and that was kind of their margin on the deal. Now you get FPPS, it's what you can get based on the difficulty plus the transaction fees. A little bit of variance in terms of how that's done, but it's the transaction fees. And then there's PPLNS, and this is the only one that has a measure of luck in it. So this is the only calculation that's going to differ in between difficulty adjustment cycles. But this is pretty uncommon right now because you see that the price is $95.83 versus my guaranteed $105 on FPPS. So if I'm trying to get every dollar out of my cash flow, I'm not going for the lower value option on my hash rate, right? I'm selling it for FPPS. So this is what everybody operates at now. This is what the value is. It comes out to about 10, 11 cents per terahash. So now we start looking at miners as a cash flow. And miners are only a cash flow. That's all they are. If you can keep them up and running, you get paid in your Bitcoins every day. The value and the cost doing that is going to vary based on your situation. Do you have a new miner? Do you have an old miner? Do you have high electricity prices? Do you have low electricity prices? Do you live in an area where you're going to have your power turned off regularly? Or do you live in an area where your power is going to be on all the time? And so what I have here is basically 3 different miners. These 2 here on the left, these are basically the new gen models. There's some slightly newer ones. But these are like the new gen models that people are deploying. The S9 is a 5-year-old model, which has powered the industry for years. There are still millions of these older units sitting around. On the left here, I have electricity prices. So as we go up, our electricity price is going down 1 cent per kilowatt hour, and as it goes down, it's going up. And what you're seeing here is basically what it costs to operate and provide that computational power, right? The cheaper my electricity is.
You do screen share on the Zoom? No, for the live audio
Yeah, okay.
on YouTube.
Is that working now?
Yes.
Okay. So a little bit bigger. So what we can see here on the left is basically the cost to provide that hash rate. Most of the time, the industry is around like a 6 cent figure. And so if you're looking at the old equipment at 6 cents, we just saw that the value of that hash rate is about 10 or 11 cents. That old equipment at 6 cents no longer cuts anymore. You're running out of data. Now, if you're running out of a lower price, that old 5-year-old equipment is still very profitable, right? If you are sitting there with a stranded gas situation or a marginal cost electricity situation, and you're in on that, and so relatively low, even on a 5-year-old miner, you can still be making some very good money. Profit is over here on the right-hand side. And so, you know, just because it's an old miner doesn't mean it's not valuable, right? That cash flow is still a cash flow, but the cost for you to get that cash flow, maintain that cash flow, is going to differ depending on your situation. This miner, you know, if it was deployed in Quebec, we'd have a marginal cash flow on there. You take that same miner and deploy it into Venezuela, which is where the price is here, you have an 80% gross margin, right? So this is a 5-year-old miner. It's worth only $70. To bring it down into Venezuela, and actually has an incredible cash flow value associated with it. So this is how this works in terms of a cost and a profit basis. And then what you can see here is how this translates into a cost to mine the Bitcoin and your ROI for this equipment. We're going to change some of these figures. We'll walk you through it. So here's cost to mine a Bitcoin. See that 6 cents. You know, this is what it's going to cost you to mine. With new equipment, you're still profitable on a gross basis, right? But on this older S9 equipment, you can't be profitable unless you lower your electricity costs. If you are operating there, this kind of low stranded gas, a lot of people are doing this flare gas play. This is how profitable some of these companies can be if they're actually taking an input and this basically has a zero cost associated with it and generating a revenue stream with it. They could be making Bitcoin, you know, for $3,000 on new equipment, or still $8,500 on this old equipment that they can pick up for very, very little value of money. Right, so this goes to about how this cash flows are, they're commodities, they're tradable, they're liquid. This hardware has a very flexible deployment and go in any country in the world in various situations. You have power from the internet, you can turn this miner on. Whether or not it's worth it to do so is dependent on your situation. But that's what we're here to kind of talk about. Yeah. Stop it up. So what you see is this is the old price that you used to be paying on this equipment. This price has gone down quite a bit. Now you can get this equipment for about $25 a terahash. And so this ROI is important. because in mining, we're trying to maintain an ROI on our equipment. And if the price for that equipment is blowing out our ROI, or our cost to operate that equipment is blowing out our ROI, why am I redeploying my capital into it? Right? I should be, if my ROI is too high, I should be buying a coin, right? The only reason why I'm investing in Bitcoin miners instead of Bitcoin is because this ROI is so attractive that I'm sure that I'm going to put more Bitcoin at the end of the day by making an investment into the miner than I will just by making an investment into the coin itself, right? And that's true regardless of whether the price goes up or the price goes down if your unit of account is Bitcoin. And these pieces of hardware are trading, like I said, liquidly, based on the value of the cash flows that they generate. So I'm going to bring this over here to this one. This is a bit bigger. So this is a table that just shows basically every model that's out there, the information that it's profitability in terms of what it's generating. But what's important here are these implied figures. These implied figures is based on the profitability. This is what that value of the miner should be worth to the markets. And this is fairly accurate. These S19s, the new ones, the XPs, they're still going for a very high price. You buy these on the second market for about $6,500 to $7,000 right now. And that's because they have a very, very high efficiency. You can see here, this is a terrible deal. I got almost a 2-year ROI minus brand new equipment, right? If I actually go down and I go back to some more old equipment, like one of these S9s, you'll see that the S9 has an estimated value of about $20. And you can pick up an S9 for about $20 to $50. $20? Yeah, you can do that for about $20 to $50. You can still buy one of these miners. Now it's not worth very much, right? Like we said, if you have an average electricity price, you're not profitable. That's why the cash price is so low. But if you have a lower cash price in terms of your fuel, this is actually going to generate you a pretty decent, ROI. You're at $1.30 to purchase the terahash, and it's generating 10-11 cents worth of revenue per day. If your operating cost is 3-4 cents, you're looking at like an 8 cent to 7 cent margin, and then you're going to be picking up that ROI in a much faster time than you would on the newer miners just paying stock credits, right? And so everything about mining is brought back to this. It's the same concept. We are buying cash flows and we are managing cash flows, and whoever can allocate that capital most efficiently into new cash flows and to maintaining cash flows is going to be the most profitable miner at the long term, right? And the reality is that I know we have talked a lot about some kind of hedging strategies and optionalities that you can take as an miner. The industry will get there. I mean, it hasn't evolved to that point yet. It shows just how immature and new this space still is. But what you have done historically is position yourself so low on the cost curve that you're going to be shielded irregardless. And so this is what happens when you look at the cost curve and how you can position yourself as a miner or evaluate yourself as a miner. So here I've got this input cost, and this is going to be my cost per terahash. And what I'm going to do is I just pulled it straight from here. This is the price that's more common for a public miner is about 4 cents. Input that into a new miner, you have a 3 cent cost to generate that per terahash. So now you have the sensitivity table here. And what happens in the sensitivity table is as you go across this x-axis here, the network is going to grow in size. As you go back to the left, the network is going to shrink in size. And as you go down here, the Bitcoin price increases. As you go up, the Bitcoin price decreases. And what you have here is basically a rainbow chart that shows you how that input in terms of operating that terahash is work in terms of your margins across all these different scenarios. Because I have no control over my revenue. Now, hedging options can give me a little bit more control over my revenue, but I can't determine what the Bitcoin price is going to be. I can't determine what difficulty is going to be and what network hash rate is going to look like. all I can do is control my own production and my own costs, right? And as long as I can control my own costs and try to move my costs to be so competitive that irregardless, I'm in a strong position to be profitable. And so you take those S19s, you put them in here, and you have a 3 cent. Even today at this 22,000 Bitcoin price and around 200 exahash for the network, we're looking at 10.5 cents revenue, which this is showing that is going to be about 2 times your cost, right? So you have a reasonable margin even here. Now, what happens if the price continues to fall down? People wonder, at what point does mining become unprofitable? Well, I mean, basically, it's this red category here. So I've got that new miner and reasonably priced electricity. It's this red scenario here where Bitcoin is at $5,000 and the network hasn't pulled back at all. We're talking about a scenario where the price falls 75%, but network hash rate stays right where it is. What you've already seen is that because everybody has a different cost input, that is going to create a normal distribution curve in terms of what it costs to operate, what it costs to produce a Bitcoin, right? And that's going to shift over time where that median number lies. And they'll have to turn off first. When they turn off, they'll see that market share to other miners and they'll get profitability. So as the price goes down, what you see is that the network hash rate would also pull back. And so this window is going to shift, right? And we're going to go from, probably we have a fall down to 15,000 or 10,000. We're probably going to have a fall down to 150, 160 exahash. Because there's just not going to be that profitability incentive to keep that hash rate on. Now, some of that's going to be older miners, and some of that's going to be software improvements where people are underclocking their miners and driving a higher efficiency and a higher profitability. Yeah. So X are rewards, right? And the price of the miners is determined on the predicted cash flow. So if you go back to that table here for this, basically, if you see here, this is a simplified thing, but you can read it. You can see on the whole thing. Basically, saying what's the predicted cash flow that this miner is going to generate, and then it provides a PV discount, right? And so that's all this is doing. There's another multiplier in there that tries to deal with efficiency of older versus newer machines. But the halving is going to drop the price of the machines, because it's going to cut the amount of the expected revenue. But what we've seen historically is that there is a reduction in price and a reduction in mining profitability, but 6 months afterwards, the price increase or so is more than offsetting the reduction in the hash rate. And generally speaking, right around the halving is one of the best times to invest in Bitcoin mining, because people are panicked. People are afraid. People don't know what's going to happen with the network price, and what's going to happen. So they just panic. That's the best time to buy into Bitcoin mining is around halving events. Yeah. So there's only 2 ways to cool mine. What's the best way to cool your miners? There's only 2 ways to cool a miner, really, and it's air cooled and it's some sort of a liquid cooling. Air cooled is cheap, it's easy, and it's the standard. Liquid cooling is more efficient, but the efficiency comes at a cost, and the cost is really not there yet to compete with air cooled. Unless you're in a special situation where you are actually reselling the heat or repurposing the heat, or have specific noise reductions, or if you're in a situation like Dubai, where when we were at the conference last year, there was an announcement from a company in Dubai. They bought $650 million worth of mining equipment to deploy in Dubai. Operating conditions that range over 40 degrees Celsius, you can't just rely on a traditional data cooling system with air conditioning, right? right? So in those situations, you'll use immersion, but in almost every other situation, air is still the way to go. So way, way cheaper. And immersion will get there, but we're quite a long time away from that being deployed at scale.
I've been to enough mining conferences, and they make it sound like it's significantly more cost efficient. The immersion cooling, providers, right, from the oil itself to the casing to everything, they make it sound like it's a no-brainer.
It's in terms of operational efficiency, it's really easy to keep it maintained, but to get it set up, total nightmare. And the cost of this fluid is just ridiculous. I mean, you're talking about fluid pricing that could be over $100 a liter, and you have to fill whole gallon drums of this stuff. Obviously, there are ways to reduce that price. The price is going to come down. The reason why the price is so high now is because there's a profit incentive and it's a really small scale, and people haven't played around with enough fluids. I mean, the fluids are easy. They don't have a lot of chemical properties that you really need to be an adequate cooling technology. You can get another fluid from China for $1 a liter that has all the same thermal and chemical properties to have the cooling and the heat transfer, right? So the cost will go down. Right now, it's just still way, way too early.
I'm always talking about this moderating one of these panels about cooling. Is it going to be like that episode of Breaking Bad where they have to get that coolant out of the energy store if you watch the show?
Yeah.
Well, they stop
With the bathtub.
to get like that coolant. Yeah, no, I forgot what it was.
You can use anything, you know, I mean, to be an immersion fluid, it has to be non-electrically conductive, right? And it has to have an operating temperature range that's suitable for your environment, right? That's basically it. You'd also want it to be easy to work with, you know, so when you pull the miners out, it's not really sticking on the board, so you want to have kind of low viscosity on that so you can clean it. But I mean, there's a lot of chemicals that have those properties. There's infinite amounts of chemicals, you know, that have those properties. 5 minutes. Okay. So I just wanted to walk through two other things to try and show you a little bit more about what this is. So quickly, I will show you the relationship on a 3-year chart. So blue is difficulty, red is price, and yellow is the income that I'm talking about, this USD per terahash. And so you can see how this price works over time. Clearly, the Bitcoin price is doing more of the driving force in terms of a relationship change than the actual difficulty, but the difficulty is driving that long-term average change. That's reducing the amount of Bitcoin that you're getting. That should theoretically reduce the amount of USD per terahash that you're receiving in return. But Bitcoin price is the ultimate driver here that determines this up or down. And because our bills are all in USD, even for the miners themselves, this is what you as a miner need to look at is this kind of cost curve. And really what you see here is that we are at the lowest point that we've been since Q4 2020 in terms of mining economics. So despite a massive increase in price, despite a higher price than we had in Q4 2020, we have so much hash rate growth that in terms of economics, we're at the lowest point we've been in almost 3 years. And then two final points on this. The other way to look at this is a market for energy. So what is the value of that hash rate converted back into a kilowatt hour rate over time? And if you are doing a gas play, like a flare gas situation, this is what you're looking for, because you're trying to monetize your energy. You're not trying to, mine Bitcoin, right? And so this is what that implied value for an S9 would be. You can see that the value for that energy ranges anywhere from about 20 cents per kilowatt hour at the high last year during the bull market to about 4 cents on the low. Now, given your cost inputs to generate electricity with natural gas, you're looking at about 2.5 cents, depending on where you are, what's it cost to pull it out of the ground, depreciation on the equipment, how you finance it, and everything else. So this is a more viable market for oil and gas companies to actually sell their natural gas to the Bitcoin mining network through mining, and how it's going to make that S9 equipment viable even in the long term. This is that value of that S9 being applied there. If we change that to like an S19, the value would be significantly higher. So if you had a new piece of miner, right, the value of your energy then could be significantly higher. So this is what it means for an energy space and why energy companies are interested in this. This price that you see here is higher than most energy companies would ever dream of selling their energy, right? So this shows the value of that energy to miners, right, from an energy utility perspective. And that is where everything is going to get merged in there, taking advantage of this excess waste heat, excess waste electricity, and using it to monetize for incredibly high margins. The last thing I wanted to point out here is this. And let me just reset this. So last point to talk about here. You might be wondering about the manufacturers right now and how the manufacturers are doing during the worst Bitcoin mining economic period that we've had in almost 3 years. Well, the manufacturers are actually in quite a good position because they've structured their contracts to protect them in any worst case scenario. What you see here is basically Bitmain is producing about 100,000 miners a month at the 140 terahash average. What that means is that they're producing 14 exahash worth of equipment every single month, and this is one manufacturer. Now, this is the manufacturer represents the vast majority of new hash rate. It's about 80% or so of all the new miners that will get made on a whatever basis. 80% is Bitmain, the rest is the remaining. But this starts giving you an implication of how fast the network could theoretically grow, if the profit incentive was there, 14 exahash a month. We've actually had a pullback of about 14 exahash for the last 2 months because of the lower price, because of the weak economics, which is either software or people turning off miners that are no longer profitable. But Bitmain had structured their contracts at the high 80s or the low 80s per terahash. And what they had in there was a floating price mechanism. So you buy the miner, you contractually agree to pay a maximum price per terahash. And then there's a formula based on market-driven economics that will reset the price. Now, you make multiple deposits on the miner. The miners are, the miner deposits are unrecoverable. If you choose to walk away, or you choose to cancel or gig or whatever, you forfeit all your deposits. Bitmain keeps the remaining. So what Bitmain did is that even though the value of the miners themselves had fallen significantly, they looked at their contracts and they said, what if miners already paid to date? And they positioned the sale of those miners to be just under the amount that miners had already paid. And so from the purchaser's perspective, you have no further capital outlay in order to take possession of these miners. Your marginal cost to take possession of what you've already paid for is zero, right? But what you're agreeing to is you're paying more money for the miner than it's worth, right? I'm now agreeing to pay $7,600 for a miner that the market is valuing at $7,000 or $6,500, right? So Bitmain is doing just fine. They have a massive margin still baked in there because of how they've structured their contracts and positioned themselves. Now the miners themselves are going to struggle because you are taking on a miner that's worth already significantly less than what you've paid. And now you have to generate an ROI based on a price which is not even close to retail. So this is one of the few times in the Bitcoin mining market where retail is actually paying less than people are paying from the manufacturers who've already locked in their prices. And so this is why this is kind of maybe an interesting environment for some people in this room. If you've ever been looking at getting into mining, now you're starting to look at this is actually a great time to get into mining because the hardware has really not been this cheap in a very, very long time. There has not been this much fear in a very, very long time. And if the markets, would take another leg lower, there'd be a lot of people kind of pushed into a liquidation position on their miners, and you'd be able to get a very cheap Bitcoin cash flow at a very, very nice discounted price, and you can ride that thing all the way up. And when Bitcoin gets to a much higher value, I'd recommend you sell the miner and take it, because that's going to get you the most value out of it. But just to give you a little indication of how big this market is, that's what these numbers are on the board. Bitmain issued coupons to kind of compensate you for the miners. So they issued about $270 million coupons in miners last month, and they're giving about $430 million worth of credits towards the miners who've already made these purchases, and they're missing out in terms of that top dollar revenue, about $2 billion worth of top line revenue that they could have otherwise made had the market been in a better position. That doesn't mean they're not profitable now, right? They're still making tons of money. They can afford to give out hundreds of millions of dollars. So the manufacturers are in a very good position right now. They're going to continue to generate good profits. And yeah, this is a very good time to be in money. Or an interesting time to get started. Yeah.
I got a little bit longer. Spanish to describe today. So everybody already knows each other, so you have to do a proper intro as well. And we're still like live streaming this as well. And after that, we'll do a little bit of a panel, but more of a Q&A, not a panel, but we'll get a couple of other people that have been involved in mining on here for some Q&A. And I would love to do one more panel towards the end. Ezra over there. Are you gonna do it? No? All right. We'll think of something. I was gonna do something on like well, kind of like what you do and what Marcia does. So we'll see. Maybe we'll get a few real estate people. I don't know. We'll see. We'll see how we do it on the fly. So we gotta sit here. Hold that. This is being a clicker or
No.
no? Okay. So, but go ahead and do an intro so that everyone. Oh, go to mirror settings. So display settings on desktop. Display. And then mirror down here somewhere. Arrangement. Mirror. That should work. Yep, there you are. All right, so I'm not a Mac person, so you gotta. All right, there's a mic, and then keep that near your
Hi all. Tom just said I'm at a disadvantage because I just arrived today, but actually I met Tone over a week ago at Mining Disrupt conference in Miami that my firm was one of the sponsors of. And we had an amazing panel discussion on Bitcoin mining being a green investment. And today I'm here to introduce the company and also to introduce myself to all of you, because I feel like, yeah, I really missed out on the first few days. I'm here with, I'm Lesia. I'm in charge of investor relations at JKL Group. And we came to the Mining Disrupt conference with the Fund to Farm slogan. The fund farm is represented by our capital side, JKL Capital. That is where the firm started officially originally in 2017 with an OTC desk. We also have an asset manager there doing quant trading strategies. That's why it's quite a shame that I missed the previous days where you were covering quantitative trading in detail. However, more excitingly, we have just launched our first mining facility in Texas with 35 megawatts, and that is JKL Mining, the company that we have been sponsoring Mining Disrupt with. I just wanted to show you as a little introduction what we're doing at the site. Okay, I think the sound is not connected, but the sound is not really the most important part of it. So it's a container solution, 35 megawatts, based in Midlands, Texas. We have 4 more sites in the pipeline where the land contracts are signed, the PPAs are signed, and we are currently looking for financing opportunities to develop 4 further sites. The first one is up and running and ready to accept miners now. The idea originally was to split 50-50 between self-mining and hosting. So self-mining is owning our own machines, while hosting is more of a model where we charge miners to come plug into our farms. In the end, the first location, the 35 megawatts, is all hosting solutions, and then the future locations are going to be split between self-mining and hosting. So to Mining Disrupt, we came with a little overview, with a little presentation on how institutional investors see mining. And the reason we chose to speak about it is because we have the expertise in the fund side. Most of our investors are institutional investors. We also have family offices, high net worth individuals. And by talking to them about mining, we have derived this framework called GRID. It's just 4 main points to remember when you speak to institutional investors about Bitcoin mining. I mean, Ben has already had a very in-depth presentation about mining and pricing and the facilities, how to, like, with all these financial models. But I just wanted to know how many of you are actually in mining or investing in mining? Okay, so I imagine that my presentation will be more directed at those who are looking at the industry, but not really knowing what is the upside, how it relates to some traditional investments. So this framework we came up with, green, first letter G stands for green. Bitcoin mining has a huge potential as a load balancer, meaning that it has the potential to save wasted energy. And we have been talking a lot about flare gas in Ben's presentation before, and also at the conference there was a whole panel discussion about Bitcoin mining being a green type of investment, an ESG graded investment. So Bitcoin mining provides a stable and continuous demand for energy. It can be switched off and on anytime. And actually our mining farms in Texas are part of ERCOT agreement, meaning that in periods when the grid is under distress demand due to some, normally it's due to natural disasters or other type of high risk events. In those periods, we are plugging off the grid and providing the excess energy to industry of the site. And the third point is obviously Bitcoin mining is location agnostic. In traditional electricity industries, there is a lot of wastage of energy due to transportation. In Bitcoin mining, it can be located right next to the grid, plugged in without any wastage based on transportation. Now combine that with the fact that in the second quarter of 2022, the sustainable energy mix in Bitcoin mining has reached 60%. And there has been a 46% increase in mining efficiency. Again, something that has been mentioned before. Bitcoin mining is every year there's the efficiency, energy efficiency of Bitcoin mining is growing. So all that creates a big case for Bitcoin mining to become an ESG grade product. And then once that happens, obviously, imagine this the pool of institutional capital that will flow into this space. Our part is the return on investment. Again, something that has been mentioned before, but just compared to traditional investments, it's quite rare to find an investment which would not require a high capex at the beginning and would have a linear return on investment. What I mean by this is regardless whether you start with 10K, 100K, 1 million or 10 million, you are still expected to make your money back in under 2 years' time on average. With traditional investments, normally you require much higher capex at the beginning, and then the return on investment would be much more flat, at least in the first few years until the project takes off. I part is the investment in underlying or investment in BTC. Again, a lot of institutional investors are unhappy with the volatility of the underlying Bitcoin. So with Bitcoin mining, institutional investors on the one hand side end up having a very stable cash generating wealth management product. On the other hand side, they do have exposure to the mined Bitcoin, and then it's up to you and up to your investment, your risk appetite, whether you want to hodl this Bitcoin, whether you want to cash out and invest in something more stable, or whether you want to deploy it in quantitative strategies. Quantitative strategies are interesting because they're built around risk-adjusted returns. So on the one hand side, you have the mining business, and on the other hand side, you have your BTC, which is generating very interesting risk-adjusted returns through some quant strategies. This is something, these two quant strategies on the slide, the arbitrage and directional strategy is the ones that we offer with JKL Capital. We can further discuss after this presentation more about JKL and what we do. The last point is the DCF also was briefly mentioned. Basically, the problem a lot of institutional investors have with investing directly in cryptocurrencies is valuation. There is no one standardized valuation model for cryptocurrencies, whereas with mining business, whether you are a hosting facility or whether you have whether you have miners, you have your projected future cash flows. If you have a hosting facility, you have your hosting fees that you expect to receive regularly in future. And if you own miners, you have your future mined BTC that you can just discount to the present value, and then you get your valuation. So again, a discounted cash flow model. That's discounted cash flow model. So that is the basic of every valuation in traditional, for institutional investors. The way it works is you have your projected future cash flows periodically, say quarterly, and then you use the current interest rate to discount it to the present value, and that's how you derive the valuation. That's the simplest way. Obviously, there's all the other comparable comps and everything, but this is something that institutional investors are very familiar with. That's the basic of M&A is DCF. And then just to wrap up, a little overview of our sites that are under development. So the first one you've already seen, that one is launched up and running with 35 megawatts. We have 4 more. So the first site is in Saddleback, that is near Pecos in Midlands. I've never been there, but I've heard some horrible stories about the temperature. I can imagine some of you might know. Then we have 4 more sites in development. What is interesting here is the power capacity meaning the PPAs that we have in place. And then there is the total capacity, which is the capacity which can be further expanded once we secure financing. The first site is unencumbered. We do not have any, we did not finance it. It's fully self-financed. For the next 4 sites, for us, we were thinking originally, actually before the conference, we were thinking of financing it on our own. But like Ben just mentioned, this is the best time to be entering into Bitcoin mining. And just to benefit of the current environment, we're currently speaking to traditional funds, looking to finance with that, using our facilities as collateral. That would be the most interesting model for us. So if any of you from more traditional investment side do any types of financing using transformers, generators, PPA, land contracts. That is something we would like to discuss as well. I think at this point, yeah, this is just our projected P&L for the 5 sites for Saddleback, and the 4 sites generating around 15 million USD in P&L per year. So thank you very much. Really excited to getting to know you later today, and I will pass over to Tony.
Questions, we can get Ben back up here. Also, Brandon, if you want to come up. A bunch of people had questions for you a couple of days ago as far as cooling some of these miners. And Aaron, I don't know if you want to walk through as well. If you have mining experience. By the way, were you there for the mining panel, the OG mining panel at Mining Disrupt? You have to get the video of that. You have to watch. It was hilarious.
Are you still looking for property in Texas, or did you identify them already?
So the 4 sites that are under development, we already secured land. For the next 6 months, we will not be looking for new ones, because for now we're just developing that, but we're always looking to expand. We also have partner companies for.
I just bought 86 acres.
This miner almost burned down this giant warehouse, you know.
We can let's discuss later, because we also have our sister company, Accredited. They're a bit later stage than us, so they haven't launched their operation yet, but they are at a much larger scale than we are. So that might be something else.
Yeah, so this bad boy almost caused me a divorce.
Let's see. You're still here, right? You're still here tonight. Yeah, let's.
Right, jump back on, we run another share.
It's okay. It's okay.
I am still live streaming. Yeah, you have a microphone, and just go and take that off. That's the microphone, the one that's attached. And just you have 2 of them. So just as you're holding this mic, just hold this mic close. Right, we got 2 new people here. Aaron, introduce yourself, and then we go from there. Your mining experience.
Hey guys, so my name is Aaron Smith-Hayes. I started mining back in early 2017 just for the love of the technology. I got asked by a friend to strap 12 graphics cards to the computer, and I loved it. After that, I got introduced to crypto, and I really got my love into mining. I played with ASICs for many years. I definitely almost burned my house down with a few of them, and almost lost life. So yeah, I'd love to see that map that you were talking about.
Oh, it was great.
Hey everyone, I'm Brandon Keys. I'm the director of engineering for Ghostfruit, which is a Bitcoin mining hosting company, but I'm primarily looking at alternative solutions to use the heat from the Bitcoin miners for, industrial and housing applications. So yeah, that's me.
Tone, who's running this thing? Are you running?
Oh, I can. I think you guys can figure it out.
Do we have any questions?
It's more for a Q&A. I'll look around with the other big microphones.
Yeah.
There's always questions, like mining has been like the most popular thing. Someone has a question.
Yeah.
So I'm not sure who to direct this to, but just curious, guys, how much does the mining community actually affect or can affect the price of Bitcoin?
We shouldn't really be affecting it too much anymore, right? The more that new amounts of Bitcoins coming into supply every day relative to existing supply, that number goes down every single day, right? The amount of Bitcoins that we would have to sell relative to existing supply are always meaningless. So we shouldn't really affect this at all.
You guys sure you don't want to do a panel? You wanna, I was just hoping you guys would like do a panel about like helping people like invest their retirement money or something like that.
I mean, my team does it. We roll forward.
Right. And you also help do that. Alright. Questions? Oh, wow, okay. All right, Doug, you're gonna be doing this then. Want me to do a walk around?
Yeah.
Okay.
So my question is, there's a lot of ESG stuff going on here and, whatever, politically driven probably. And Bitcoiners, myself included, have been screaming, no, we are pushing renewables. We are helping with this because XYZ reasons. And so like in places like ERCOT, in Texas, which is is ERCOT, how do you spin that? I mean, are they developing more solar fields or wind farms or that kind of stuff?
Actually, from the grid, in our mining farms, obviously we're connected to the grid. You would be surprised when you look into what is the percentage of sustainable energy in Texas grid. If there is any audit report, which I would be interested to look into as well, but everything I have been hearing from people is that Texas, out of all the states, has the biggest mix of clean energy. They're using a lot of solar power, there's wind power included there. So I think that is a way to say that even if it's not a purely green energy side, there's still a huge mix of that green energy in the grid. And then just to follow up on the ESG stuff on crypto mining, there's obviously a lot of potential in the field and a lot of things being developed. When you come and talk to the person, they never ask how sustainable the shirt is and how sustainable the phone is. But however, Bitcoin mining, which there have been global Bitcoin councils that have proven record saying that the mix of sustainable energy in the whole area is now reaching 60%, and yet there's still on and on discussing it with regulators, discussing it with investors, having to prove that we're sustainable, whereas production of actual production is 10 times more carbon tax. So I feel like there's a little bias towards Bitcoin mining because it's an easy target. The industry is in its infancy. There's a lot of uncertainty, concerns around it. So I feel like it's just a easy target. And the more we talk about it, the more we talk to the regulators about it, the more we talk to traditional investors about it, the more clarity there will be in it. So hopefully we will not be having conversations.
So ESG and
Hold on, Ben.
Yep, there you go. Oh, my bad. There's a mute button on these little mics.
So the ESG and mining thing, this comes up everywhere all the time. Let's be very clear about it. It's all a bunch of bullshit. Nothing about it is real. Like nothing about it is real. All the data is lies. It's all made up. It's been proven, wrong and fraudulent multiple times over. I've done it multiple times over. Many other people smarter than me have done it multiple times over. It all comes from a single source. It's all bullshit. And we should not be focused on end use of power and trying to judge people and discriminate on end uses of power. Like the reality is that like the amount of power that we're consuming is so small. And if miners are going to a place like Texas to take advantage of wind and solar, the reality of that situation is that it's only profitable for miners to go in there because they're addressing a market inefficiency that was caused by the subsidies to bring the wind and solar there in the first place, right? That needs to be understood because it does not make sense to invest in your own wind and solar project in order to mine Bitcoin. And there are companies out there, because you can raise capital on such an idea, they will go out there and they will, raise money and they will deploy. Those are terrible ideas. They're terrible ideas and it's a terrible allocation of capital and it's all based on nonsense. And so, that's just the math. If you want to go into it further, there's a lot of things to go into, but the reality is that Bitcoin's going to be powered by every energy source on the planet at the end of the day. and it's going to be taking advantage largely of waste power with marginal cost. Like that's the big economic incentive here with Bitcoin mining. Let's take advantage of other sources of power that have literally no other application, and otherwise its value accordingly is zero. That's the power that's going to power Bitcoin mining in the future. Things like transaction fees can make up, a meaningful economic incentive to power the network, even if that's all there is, because that's what your input's going to be. And so we shouldn't judge on energy use.
Yeah, so I mine in Vancouver, BC, and 98% of our energy comes from hydro. That hydro is generated regardless of if we're using it or not. So BC Hydro actually loves miners, right? They will help you set up on a previous gold mine that has a 400 amp service and get you going. If anything, cryptocurrency and Bitcoin is good for renewable energy because we're moving in there and we're taking up the missing energy that's not being used, and we're helping them turn into not only a viable renewable energy source, but a viable business model as well.
Yeah, just to kind of close it up, but the ESG narrative's been weaponized against Bitcoin mining and Bitcoin miners. So, I mean, I think, everybody kind of hit it up here, but at the end of the day, sustainable energy is going to be what powers Bitcoin at the end, long term. So looking into some of those solutions where you can, capture flare gas and other things that might not be considered ESG according to their standards, although, that's a very popular method right now, and it's capturing a lot of energy that's normally just wasted. I think a lot of wasted energy and finding other sources of energy is going to be the way of the future. And right now it's just at a time where it's being weaponized. And so, yeah, I think, Ben nailed it perfectly that ESG is all bullshit. So.
Other questions here? Closer here.
Thanks, man. Okay, I have the question that what is the average price for miners for 1 Bitcoin right now?
What's the average price for a miner right now?
Yeah,
what's to mine?
Yeah, what's the average price for you to mine 1 Bitcoin in Texas, for example? Cost of mining, yeah.
Yeah, so it varies, right? Based on, I put up that table earlier today that showed what's your price there on the left and what kind of equipment that you're mining on. If you're mining on a new miner like a Bitmain S19J, right, and your power price is as low as 4 cents, you're at $3,000 to mine a Bitcoin, right? Now, I can't remember what the prices were when we get up. I think around 6 cents. It was somewhere around 8,000 or so, if I remember that table correctly, to mine a Bitcoin, right? But it's dependent on what kind of miner you're running, how efficient it is, right, and what's your power price, and that's going to determine your cost at the end of the day, and it's going to have a wide variance because running a brand new miner today and running a brand new miner from 5 years ago, you're going to have a 4 or 5 times difference in price. There is no average. There is no average.
Okay.
So I've been watching the Bitfarm stock since Dubai. And how do you value publicly traded mining stocks? What is the metric that they use on a price to book, or what multiple, and where are those at now during this correction period?
Yeah, it's a good question. How do you value Bitcoin mining stocks? And the answer is the market hasn't even figured that out yet. When public Bitcoin mining stocks really started getting attractive was January of 21, right? So this is right at the start of the rally. A lot of institutional investors are looking at how do you get exposure to Bitcoin, maybe in their more traditional portfolios with their existing tool sets, and miners were a great way to get exposure to it. Not knowing what they were investing in, I think people latched on to one number only, and that was your end of 22 hash rate. So miners were incentivized to buy huge contracts of Bitcoin mining machines, and say, hey, we're going to have these all plugged in 18 to 24 months, and this is what our hash rate's going to be in the future. Don't judge us based on where we are now. Judge us based on where we're going to be in 18 to 24 months. That's a very flawed methodology, especially for judging and evaluating a company that has zero operational experience, right? I mean, if you've never done this before and you say that you're going to just deploy all this equipment, you know, it's just your word, right? And what we're seeing now is that still the market valuations for miners don't match up with the performance of the miners. So all the miners are down. They're all down like 90% plus since the fall. I think we have been a little bit, we had a little bounce off the floor, but the miners are down 90%. And you know, if you look at the two biggest miners, they'll give you a very stark comparison for how unfair the valuations are across space. The most valuable miner in the space is Marathon. Marathon's traded at probably a $900 million market cap, maybe $1 billion market cap, give or take, today. And then the next biggest one would be Core Scientific. Now, one of those miners is the largest miner in North America, both in terms of operational hash rate, but also in terms of their hosted hash rate. The other miner is Marathon, right? Now, it doesn't make any sense. You know, Core Scientific has 10 exahash worth of operating hash rate. They've got 10 exahash worth of hosting equipment. They've got hundreds of megawatts deployed, and they're valued less than a company that currently has 700 petahash operational. You're talking about a difference of 93%. You know, and the other company, the company at 7 is valued at more. And so how these companies are valued by markets, the markets have not figured it out yet. But how you as an investor should value it is based on what the miner is doing on a month-to-month basis, right? How much Bitcoin are they producing every month? What are they getting in terms of revenue? What do their cost figures look like? How much of the Bitcoin are they hodling? How much are they saving? Are they actually executing on their growth plans? How far off from their growth plans are they? Because if you're not evaluating them on what they're going to do today, what they're going to do tomorrow is completely irrelevant. And that's what the market is focused on, is what the miner is going to be worth tomorrow. And because of that, there is an opportunity for investors to try and identify greater value, right? By sorting through the nonsense and saying, it doesn't make sense for this miner to be worth 900 million and this miner also be worth 900 million, even though their revenues and their profitability figures are literally like a 25x difference.
Any other questions?
Hey, so I was involved in mining pretty early, and I just recently found out, thanks to Ugly over there, about futures. Have any of you guys implemented strategies to utilize futures to stabilize your Bitcoin yields?
So I actually learned about this in Dubai from Ugly back in Dubai, when Ugly said, "You've got such a great cash flow machine. Why don't you hedge?" And I said, never thought about it. And that's the reality, is that this is a very, very new space, and that most of these products for especially geared toward Bitcoin miners are also brand new. And really, you weren't given a greater valuation by trading away upside. And so nobody did it. I think this is a really cool and interesting space, what they're doing there with the options. I think it's gonna be huge for mining. But no, I haven't done it, but I'm gonna do it though.
So on the capital side of business, we're talking obviously with a lot of liquidity providers, market makers, those who provide those option strategies. And this is the discussion we had back in May to say that, miners, it's not that some forgot to buy protection, some hoped that there's only upside from here. So I think from this cycle, there's a lot of lessons to be learned. And what's interesting is in the most recent discussion we had a few weeks ago, they're now seeing a lot of miners buying protection around 13, 15K, buying protective puts there. So you normally do buy protection with options. But it's interesting to see how like the previous downside was missed, and now the downside around 13, 15K you know, it's nice to see that the miners are learning from this experience, and obviously going onward, that should be the standard for the industry.
Yeah, and Ghost Fruit, we're still a very early on startup, so we're not to that stage quite yet. So.
So how are mining stocks? Are you better off buying one Bitcoin at this price right now, or going into one of these undervalued mining plays? If your back's against the wall, you have to answer.
I think I'll take a card from Ugly here. If you're buying mining stocks, that is like pure speculation. Stick to about 5% of your portfolio and keep the rest in Bitcoin, right?
As someone whose portfolio is a lot higher than 5% in public mining stocks, I obviously have a different take on it. But the reality is that we're a leverage play on Bitcoin in a traditional portfolio, and so you should only invest in a miner if you think that Bitcoin is going up. Like, that's it. And if you don't think that Bitcoin's going up and you don't want that exposure in traditional portfolio, then a mining stock is not for you. And you're just better off dollar cost averaging, buying the coins, having your own self custody, and not having to deal with the counterparty risk, that the other miner fails to actually deliver on their end of 2022 hash rate goals, which has driven their valuation to date, because we're 5 months away. And if we do take another leg down, there will be miners that do not make it, right? So you should only invest in Bitcoin miners if you think that Bitcoin price is going up, you're comfortable with that leverage exposure, and you specifically want that leverage exposure in your IRA or whatever that is that you're trying to get exposure in, specifically in public stocks.
Hold on. Okay. At that big Bitcoin mining conference that you just had, did you have anybody there teaching you about hedging, or are people in the industry just not doing it? Because I was flabbergasted that nobody was hedging. I just assumed that if you're mining, you got to be hedging this stuff. But are you being taught that?
You don't know what you don't know.
Okay, we're gonna work it out for us, don't we? That's where we're going, guys. You need to educate us, because we don't understand. I don't understand your business. You know your business, but we can teach you how to hedge. But we don't need to know all the details. You just need to know the mechanisms that are out there that you can use.
Yeah, I mean, John probably knows this better about when these products kind of came into the market, but I only first learned of them maybe the end of last year, the beginning of this year, and I was looking for them, right? So, here we are, we've got a large company. If these products were around, I wasn't receiving the email offering, I wasn't receiving the cold call saying, hey, we've got this new structured finance product for you. We think that you'd be interested in it. We weren't presented with, these kind of opportunities, but we did seek them out, and we did start seeing that most of the companies now who are doing financing are also providing some sort of structured product, especially attached with the financing. But this is pretty new stuff.
Okay.
Yep, at the back.
Okay, so I was wondering how much is the lifetime of the mining equipment that you guys use? For how long do you have them until you have to replace them for new machines?
It's just a computer. If you take good care of it, it'll just run indefinitely. Whether or not it's cost effective to do so is another thing to consider. But right now, like I said, that S19, that's a 5-year-old, 6-year-old miner at this point, and it's still profitable in some situations, right? My general rule of thumb is a 5 to 7 year economic useful lifespan.
Yeah, and I think another aspect of it too, Ben kind of covered it a little bit earlier in his speech, but it's maintaining the temperature of those miners can definitely increase the lifespan, whether it's like air cooling or submersion or other things like that. Those methodologies help those miners last a little bit longer.
All right, one more question? Yeah, right there. Okay.
This question is for Lucia. Other people talk about diversification or having hedging and all that. You guys will be all five in one state. Does that pose a special risk for you guys?
That's a great question. Actually, all five is just the beginning for us. We started our mining operation last year. Our fund, JKL Capital, is based in Hong Kong, and we were we were witnessing what was happening with the China regulatory environment in May last year. With the China mining ban, that's when we saw the opportunity and started looking for locations. It was a very long learning process. We were exploring Iceland at some point. Iceland has some quotas for miners. We were exploring other states in the US, which we might further expand into. In the end, we stopped at Texas, but I guess you can't start building out your first location with multiple sites. Texas is the beginning for us. The timeline for the 5 sites altogether to go live is by the end of this year, and then starting as of first quarter of next year, we will be looking for other locations and also other solutions. For now, we're using containers and air cooling. For the following sites, we might explore warehouses solutions or emerging cooling. We're open for any suggestions. For us, it's a constant learning curve. We're taking our time to learn what the best practices are. The conference was amazing, meeting people, learning from their experience. So I think we are getting more and more insights, and diversification geographically for sure is a strategic goal for us in future. And I just wanted to touch on the previous question about whether to invest, whether to hodl Bitcoin or invest into mining companies. I think there's 2 different ways of investing into mining. One is buying publicly traded stocks, which are massively speculated by the market, and again, market hasn't come down to one valuation yet. On the other hand side is investing directly either into miners or into developing hosting facilities. And when you invest into miners or hosting facilities, the way to look at it is an interesting idea that was previously mentioned in the conferences, was to look at Bitcoin mining as a supply chain, where Bitcoin is the final product and then mining is the beginning of the supply chain. So if you think about oil production, the price of oil fluctuates quite a bit. It's quite volatile compared to the infrastructure used to mine this, to produce oil. Same with Bitcoin mining. By definition, Bitcoin will be the more volatile part of the equation, and then mining will be a more stable. That's why I mentioned it's more of a wealth management product, because it's stable, cash flow generating. You know what you will generate in future, given the number of miners you have. So I think that's the way to look at it. Depends on your risk appetite. Whether you're more risk averse, then probably you would be more comfortable investing into mining facilities or mining rigs. If you're happy with the volatility, but also the upside of the underlying, just hodl. I'm all about hodling privately, but from the institutional perspective, yeah, it's a personal choice of each investor.
All right, guys, I think that was great. All right, thank you so much. We got about 30 minutes left here in the conference room. We're gonna call it a day at 7. Dinners, hopefully everyone's reservation. Daisy, do we still have any more room at the steakhouse at our table? We're full.
You're full, but they can call their question.
Yes, you can try, see if there's any more room at the steakhouse. We have our tables, they're full. I'll be surprised as to who's joining us at the 2 tables. And we can do a little bit Q&A on wealth management. I don't know, say you want to come up? And if there's anyone else involved in, let's say, wealth management space that wants to answer some questions, let's say come up as well.
Definitely not wealth management, but I'm gonna kill my girlfriend here.
All right. All right, we are still live streaming, so keep that in mind. You can always turn it off if you like. All right, so we're good. All right, so one more intro, this time for the live audience of my YouTube channel. And we go from there, see if anyone has any questions.
Okay, so I introduced myself the other day. I'm Marcia Gomez. I've been a financial advisor, wealth manager for 10 years. Before that, I did real estate, and now I came back to real estate, but now as a real estate investment advisor. So what I do is that I concentrate working as to whether or not it makes sense to fit a portfolio of real estate investment properties into somebody's book or financial portfolio, right? It's a way to hedge inflation, but it's also a way that if you know how to play with it, you could do a lot for cash flow, for tax planning, and also for generational skipping of your wealth. So I did not know that I was going to be standing here. I'm not sure what to talk about. You're not in the crypto world, do not understand that. To me, it's like a different language. To wealth management, I think that what happens with a lot of people is that they don't understand doing the risk management. Most people go into investments very quickly and they don't protect themselves. The risk of becoming disabled, of dying too soon, of having a long-term disability, which is really the foundation of that pyramid. Most people just jump straight into investing. Estate planning is also something necessary, which most people don't start doing until they're in their 50s and 60s. And it's something that as soon as you start making money, you should start doing. And another thing is that when you have wealth, you have to worry about taxes and you have to worry about lawsuits. And a lot of people are exposed to that. So just in a very simple way to put it, you have to protect yourself and handle your investments. There's different branches, which I think most of you here know it, in finance. And a lot of people just take the one shop for everything and it doesn't work. You know, you have somebody that it's a specialist on this thing and the other, not always the person that's doing risk planning, the insurance agent is going to know about investments. Not everybody that's doing financial planning is also going to know much about risk planning. So it's really knowing the professionals that you hire. In terms of real estate right now, Wall Street hedge funds are really moving into real estate. There's a lot of talk because real estate usually lags behind the stock market. Stock market had a significant correction, so did crypto. So the talk is that real estate is going to follow, but all the data talks differently, right? So when you talk to, real estate has a cycle just like the stock market, but it's not a macro cycle. You got to look at it from a micro level because different states, different areas follow the cycle at different times. So we could be in a recession, let's say in Florida, which we're not, and Texas could be exploding right now. So you really have to take it to a micro level for you to make the decision if it's to buy or not to buy, to sell, and what kind of property, what kind of asset class within real estate is the time to buy. So for example, markets like Florida right now, we're having a lot of growth, economic growth, a lot of population growth. There is a lack of supply. If you compare the 2 quarters of 2021, which was the best year to date in real estate for South Florida, to the first 2 quarters of this year, we had higher velocity, even though the property prices were higher than last year. We had in the last 2 years, 122 corporations that have relocated, whether it's their headquarters or regional offices to South Florida, which will bring more employment, higher population growth, and we still have a lack of supply. So the numbers are not really determining that we will most likely hit a recession when it comes to real estate in South Florida. Different markets obviously are different. Atlanta, for example, Louisiana, they're already in a recession. There's a lot of political things that are taking place that are making that happen. California is another state, mostly because of the tax reform of 2017, truly affected New York and California. Texas and Florida were the winners. So that's bringing, there's a lot of migration and it changes the market. So right now, with everything that has happened with crypto and stock market, real estate is sort of the blue chip or another way for you to really, when you're making higher risk investments, protect yourself because it will continue, it will hold value or it will recover its value. And I don't know, it's a little bit of both. I don't know if anybody has a question.
I have a question for you. Have you ever helped clients diversify into, well, in my case, we're in the Bitcoin space here. Have you ever helped anyone diversify into like traditional income generating businesses? Like you hear about just picking up, market's down, pick up that ATM route, pick up that dry cleaner, pick up that laundromat or in a college town, that kind of thing. Have you ever worked with anything like that as far as diversifying?
Yes, and it's different. For example, when I started 10 years ago to what it is now. So different generations want different things. And when they diversify, millennials and younger generations, they don't want to work a 9 to 5. They want a lot of passive income. So different markets help with that. So I don't specifically go into the businesses. I review the plans to see if it makes sense. And in the location also. Now, when it comes to real estate assets, there is also a diversification of it, and it changes. So right now, for example, warehouses is a great way for you to diversify your portfolio of real estate assets because of all the e-commerce, right? So e-commerce is growing, and then now there's a big need for warehouses. It's also recession-proof because people will continue to need it. Offices, retail space, not longer really where to go, but medical offices is another space to go. Storage, amazing, also really good for recession. So in terms of diversifying in portfolio for real estate, I work a lot more than businesses. Businesses, I may give a consultation once I revise the plan that they already have.
Well, storage units are a business and a real estate play.
Correct.
Any other questions here? Come on, people. Okay. Got 2 of them.
I'm actually really interested in nomad economy and how people move geographically to avoid taxation. I mean, I'm based in Hong Kong, that says something. So do you do some of that consulting as well? And if so, what are the countries are you seeing people moving to most for tax benefits? And also for real estate, if that's your specialization.
Different countries' taxation, I don't know. I don't, everybody has different codes. Now, in terms of different countries moving for political reasons, for example, Latin America, huge amount of people moving because Latin America has mostly gone left, right? So you have a lot of people trying to take their money out and move it to places that are more secure. The United States, it's a safe haven for a lot of people. So they tend to move. Latin America loves Florida, South Florida. It's a cultural thing. Tends to be closer to a lot of the countries, or easier access, if not closer, because there's a lot of flights. So you see a lot of that. In America, in terms of taxes, because of tax reform of 2017, certain states were affected differently. New York and California, they just got hit really hard. And it just doesn't make sense for you to continue to make money there and spend so much money in your tax bill every year, where you have other states where you don't have those taxes. Now, is that going to change with, because it's not all the code is permanent. It's still to be seen. I think that has a lot to do whether or not Republicans come back to power.
I can tell you that
do see a lot of people moving because of that.
I was going to say, I can tell you the 3 worst states for taxation in the US are New York, California, and Minnesota, of all places. We had a question back here. Okay.
Yeah, so I'm interested in commercial real estate. What opportunities, you've heard of REITs, funds. Is there any alternative products similar that can be invested in for commercial real estate?
I don't understand. What about commercial real estate? What alternatives?
Yeah, so, there's real estate trust, there's funds. Is there any vehicle that could be utilized in mixed use investing?
Yeah, I mean, when it comes to commercial real estate, which is actually amazing during times of recession, There's a lot of ways of getting creative financing options or creative ways to get into it, whether it's crowdfunding, real estate, REITs. There's a way to do it like that. A lot of private investors, they raise funds the same way that you would raise it for other Bitcoin or for other things. You could raise it for commercial real estate. Financing for commercial real estate is actually a lot easier than what it is for residential real estate. So anything above 4 units has a lot more access, and there's ways that you could do it with certain banks, especially boutique banks and private lenders, in which you could literally come into a property, zero money on hand, and finance the entire property, because a lot of banks will, or a lot of lenders rather, they will finance the property based on the value of the property and not the purchase price. So whenever you have a recession that people get scared because the emotions play a big part into that, they want to sell. If you're able to negotiate a really good deal for yourself, you could walk with a property, a commercial property, with zero money down.
All right. Any other questions? Where'd Tone go? That's the question now. We have a question.
Nobody's asking. You know, you hear these things on TV. I have never done that, and I have no plans to do it. Like zero down and this and that. To me, that sounds always too good to be true. What I want to hear from you. What do you think?
Within commercial real estate, what happens is that you have a lot of lenders that they will lend you up to 70% of the value of a property. So for sake of argument, you buy a multifamily building that's $5 million, make it easier, $1 million, the value of the property, but you got the seller to sell it to you for $700,000, the bank will lend you up to 70% of that 1 million. So that's how it becomes 0% down. So it has to be that the value of the property is higher than the purchase price. And there are cases with certain lenders, not all of them, because a lot of them will cap you, that if they will, let's say the same building, 1 million, you negotiate it for 600, it will even take the reserves from that difference. And then also with commercial real estate, you have the great tax code, and you could accelerate the depreciation. So you could end up getting paid with that 0% down payment, because you accelerate your depreciation, take it all in 1 year. So it's an amazing strategy to have during a recession, at any time, but especially whenever we have a recession. But it's not that it's too good to be true. They just don't tell you all the details. They are caps, and you do need to have that difference between the purchase price and the value of the property.
All righty then, I guess I'm in charge now. Oh wait, there's Tone. Okay, I was gonna start telling jokes and singing. Okay, here's another question though. Okay, good, you got lucky.
Do you deal with opportunity zones?
Pardon me?
Do you deal with any opportunity zones in Miami?
I have an associate that I send most of the opportunity zone. It's not my area of expertise, and I don't think that it's really where I add the most value. I mean, I could put you in contact with that person, but it's not my area of expertise.
All right, sorry, I had to run out to get some stuff. Any other questions? Or one more. And then we may wrap up a few minutes early, so people can get ready for their dinners.
Hi, could you hear me okay? Yeah, I'm Marvin Smith. We're building a neobank. Neobank is the next big thing in England, so they say. But we also looking at embedded finance as well. One of our items on the roadmap would be wealth management. Do you have any digital, I would say, platforms that we can maybe integrate with or look at possibly exploring partnerships and so on?
In the wealth management space, I work always with wirehouses. Now I do consulting, so I don't use any specific platforms, and every platform that was used by the wirehouses were proprietary.
Here's a quick question for you. Do you own any Bitcoin?
I do not own any Bitcoin.
Okay.
Somebody gave me a card.
What?
Somebody gave me a card once. It was a birthday gift To me, it wasn't a very real thing. I do not know the password. I have no idea how much is there. I don't think it's much though.
That's okay. I'll get you a wallet and I'm going to give you some Bitcoin as a gift. Other people should donate also. And then you'll start to become savvy, and because this is where the world's going, and you will be set up as the new world for your businesses and going future, and your customers will appreciate you and you'll get new customers probably.
That would be fantastic. Actually, in South Florida, we're huge
That's where I
now with
live.
Bitcoin, and it will be really good for me to learn. That was one of my things here, but it's still, I'm at the first grade level.
That's okay.
Pre-K
Everyone is. 99% of the world is. All right, Tone, any other
Thank you.
questions here?
Don't leave yet. Don't leave yet. Hold on. I got one last thing. I just got to plug this in real quick. Boom. I have to. Like, I'm such a bad salesman. I'm gonna keep you here for like 3 minutes, and all I want to do is play a video. Yeah, probably turn that on. Hold on. Click it carefully. All right, let's see if it all goes back to where it's supposed to be. Actually, this whole projector is actually super cool. I know it's not great for a room this big, but it wirelessly can connect to your cell phone as well. HDMI. It's from my computer. It's okay. And I have a portable speaker I could easily connect. How come we don't see anything? There we go. Okay. Is this? What's wrong with my? Why did this go out? Mike, check. Okay, well, I don't need it. We'll deal with this tomorrow. Okay, super quick. I'm gonna turn that off. We're still on a live stream too, so they can see it as well. Okay. No, not that one. I mean, not docs anything either. Yeah. Boom. Full screen. Audio should be okay from here. And I'm even gonna speed it up a little. So this is the resort that we use for the same event, but in Bali. And of course, there's audio. Yeah. Well, there's no audio, but you can see that's the resort in Bali. Oh, it's coming through that. Audio's coming through there. I can change it. It's just music. No, this is the resort footage. And if you ask those that were at this resort, it is absolutely sick. It's also kids friendly, unlike this is an adults only resort. That one is kids friendly. So if you have kids, you're welcome to bring them. But for those ready to travel to Bali, and these are the rooms. These are the shots of the rooms. That's the villas, and the other option is the suites on the cliff, and there's an elevator going down to the private beach. And these are the rooms. That's the again, that's your regular suite. That's probably the smallest room they have. Yeah. So there you go. That is our. That's November 1 to 7. Birthdays. Well, you're close. But yeah, so the venue, Anna's been there. But yeah, like
probably if we were to rate everyone, Bali would be
yeah, if you rate those that went to all three, Dubai, Bali, and this, they would probably, almost everyone would probably say Bali. Just a little harder to get to. But we're gonna have our own videos from Bali this year, but that was our very first one. We didn't have, weren't properly prepared. We weren't sure this event was gonna succeed like this, but it has. So there you go. That's our Bali resort. Those are the penthouse suites, and the regular suites are in the middle. So that's what you're gonna be. All right. And registration is open, and it'll be $1,000 discount until Sunday. After Sunday is going back to normal price. Price is always the same. So there you go. If you go to the, thank you guys. Oh, and this event's not done, right? We still have a full day tomorrow. Tomorrow morning, and so we're still live streaming. We have the lovely Melissa of Epic Talks. We're probably going to use the bigger room. We're going to have a different setup here, so we'll talk. 10 a.m. tomorrow, I'm going to send out a latest schedule upgrade. 10 a.m. tomorrow, either this room or next door. And then we're going to have 2 rooms from 11 to 1 p.m. We're going to do, oh man, I shouldn't say this out loud. We're going to leave 1 room for DeFi and NFTs. I'm not going to be in there, but there's enough people that care. We'll have 1 room for that, and 1 room on something I really want to know more about, which is algorithmic trading. I've been trying to do proper algorithmic trading sessions here. I don't know, is Peter still here? Probably not. Peter, Lisa, you guys are doing algorithmic trading as well. So I've been trying to get an algorithmic trading like brainstorm going. So I'm more interested in that. Yeah. So we'll do those 2. And then our final closeout session, which is just like our opening session when everyone did their intros and asked a few questions. It's the same thing, only in reverse. You're now gonna, still give your own intro one more time real quick. Like just say the awesome things you got out of the event, hopefully, and any questions for people, but not even questions. Like, hey, I was talking to this person for like 4 hours at dinner. I learned something new. I think they should like repeat it for the, like just give us a quick summary of some of the things that you actually learned here that others might have missed. So that's what we're gonna do tomorrow. And then closing dinner tomorrow night. And Saturday is the day everyone goes home. I think I'm gonna go to skate park. Everyone had so much fun. Daisy, myself, a few others. Anyone with late flights can go to skate park. It's like this. Anyway, you gotta. Yeah, it's like zip lines and really cool stuff. Or you can just stay back and network. The Castle Island Suite will be open all day. We're staying there an extra night, just so people with late flights have one place to hang out. All right, that's it. We're still ending early. Enjoy dinner, everyone. I'm gonna cut the live stream. I don't know why the mic went out. I don't know what happened with the mics at the end. Did we kill the microphone? AV talking you want to know. Was the echo on my mouth? The echo, no, the echo was on the speaker. But you had echo on the small speaker too. Okay. Yeah, no, check. You're at 10. Is the DJ panel here? The DJ will probably be in the small. No, okay. You're at 10. Then we split the rooms. Okay. So get as many people as you can at 10. So 10 to 11 is only you. And then 11 to 1, we split the room. I normally hate splitting the room, but we will. So, okay, so this is what we gotta talk about. This room is gonna be set up for 20 people in like a round table.
Okay.
This is also the only room with a screen, not that it helps.
Yeah, because I have some slides.
Right, we have the big room. I can project this just on a wall. So do you want to use the small room for 20 people or the big room for 40 people?
You can't have 40 people.
We're gonna set it up for a round thing. I can probably leave it like this. You want to do it like this? I was hoping you would do more of like a round thing so people can like talk to each other. You're not gonna present for an hour.
No, I know, I mean, no, I mean, I was just, I have like the slides and stuff up and talk about it and ask you questions.
Okay, I'm gonna ask them to the 30 seconds.
Huh?
I'm gonna ask
You
them.
don't have to circle and I'll straight up. Yeah, that's fine.
We're trying to like get here. I should end the live stream. Everyone's like watching. Okay. We're cutting the live stream, guys. Bye. They're all looking at you, Melissa, by the way. You can wave to the camera. Melissa. That's Melissa of Epic Talks. You can find her in Miami. Yeah, I've been trying to like turn it off, but I'm getting distracted. All right. Bye, guys. This event's great.